Brokers Digest, a webcast series by The Edge Singapore, discovering market opportunities with you. This episode is sponsored by Phillip Futures.
Hello and welcome back to another episode of The Edge Singapore's Brokers Digest with me, Amala Balakrishna. It was a big week for oil markets. Demand optimism sent prices above $65 a barrel before a slight pullback amid concerns over the worsening COVID-19 crisis in India. Market watchers have not been deterred. Some of the analysts are expecting commodities prices to go up by around 10% or more in the next 6 months. This forecast is premised on two things. The first being a surge in the Brent crude to $80 a barrel as crude oil consumption swells by 5.2 million barrels a day. The second is that raw materials will hit $11,000 a ton on the back of a 13.5% increase in raw material prices. Joining me today to give us more insight on these predictions is commodities expert Aftar Sandhu from Phillip Futures. Hi Aftar, pleasure to have you with us today.
Hi Amala, it's great to be here.
Thank you. So, Aftar, I'm personally taken aback by market watchers' outlook for the commodity sector. Are these predictions in line with what you are thinking?
Yes, it's something that I've been preaching for some time. In fact, I'm glad that it's been taken note of by quite a number of people. Commodities has been the buzzword recently with economies coming out of COVID-19.
Yes, there's been talk that the commodities markets are showing the steepest backwardation in about 14 years, since the premium for commodities that can be delivered now versus later is the highest it has been since at least 2007. So one school of thought is that this is the result of a shortage in commodities, while another is that there has been a resurgence in interest. So in our previous episode, you spoke to us quite a bit about backwardation. So I'm curious to see which camp you subscribe to.
All right. In fact, it's more like a chicken and an egg kind of thing. So, what commodities are in backwardation, it tells you that there is going to be a shortage going forward. But otherwise, you feel that the interest has really come back to commodities. Why this is so is that we do have things like people talking about a reflation trade, where a lot of companies are coming out of COVID-19. And that comes back to our story, whether this surge in interest in commodities is just post-COVID or a start of a commodity rally. So my take is it's a commodity rally.
What does that actually mean, Aftar, if it's a commodity rally?
We are practically talking about commodity supercycle. A supercycle is a sustained increase in prices, and it's virtually often decades long. And if you look at the chart itself, if you take the 100 here as the base for 2016, you find that we are coming out right from here up, and it's not only one particular sector of commodities, but what we have is various groups, the energy, the metals, and the food industries that are appreciating in price.
Right. So after just now you briefly mentioned the word super cycle and how the commodity sector is entering into a super cycle. And I think that's something that we have been hearing quite a lot about lately. And let's talk about whether or not we are entering into one, whether the idea of one is far to be seen. So maybe could you talk a bit more about that to us?
We definitely are starting off with a commodity super cycle, in a sense that market is coming off. You need to understand what exactly is a commodity super cycle. It's where it's not only maybe the grains or particularly other commodities that are coming off. If you compare the last super cycle that was practically initiated by growth in China, you find that it taking the 100% start in the 2020, you find that this is where we are. And this is the last super cycle that has last practically 55 months.
Okay, so you were saying that the previous one was about 55 months. Is there a possibility for the current one that we are sort of in to last as long as the previous one? Or do you see that it's possible that it could be shorter?
I'm looking at one that could be almost 3/4 the length of this. But going forward, it also depends on many other factors. You know that we are in the midst of another wave of COVID in a number of countries. One of the BRICS countries like Brazil, and then we also have India that may stifle demand. But otherwise, we are in the start of a major bull cycle.
Right, right. So after actually a concern that I want to talk to you about is the theory that the prices of commodities correlate to inflation levels. So will this super cycle and this recovery in the commodities market accelerate the prevailing inflation levels? And so is this something that our viewers should be mindful of if they so consider trading commodities?
This morning, I was just listening to one of the news telecast where the U.S. Secretary of State, Janet Yellen, she was in fact trying to play down the emergence of inflation. She's of the view primarily that inflation may not be too much of a concern, but I think it is, although the central banks do have tools that will negate the influence of inflation on markets, but the very fact that she's highlighting this particular item, it means that people are taking note. Its primary inflation is bound to appear. Prices have dropped very low, and there is pent-up demand from commodities itself due to all economies opening up.
Right. So actually wise words from Janet Yellen, and thank you for sharing that with us, Avtar. So given this, would you say that it's better for our viewers to invest in the more popularly traded commodities like gold and oil? Or would you say that they should instead consider softer commodities like corn, soya bean, and other agricultural products?
See, if you look at a commodity itself, right, each one has its own supply demand dynamics. Oil has its own, gold has its own, and even the agriculture commodities has its own. But currently, the buzzword now is more the grains itself. The weatherman is starting in the US where the crop has just been planted. So, and the effects of weather is often unpredictable. But viewers have to be mindful is when you look at each particular commodity, study the supply demand dynamics very well and understand the fundamental drivers that are actually driving it at that particular point of time. But I would say there are opportunities in a number of commodities.
So what opportunities are there and which are the commodities that you are looking at?
Okay, if you want a perennial favorite, it's going to be copper. You can look at COMEX copper or even the LME copper. Copper will definitely be needed in a super cycle. Economies open up, there's infrastructure development, and copper is needed in practically every aspects of our life. But then if you're looking at the grains, then the grains do pay attention to the weather and the crop that is growing in the US.
I think copper and grains, like you mentioned, are not so typical commodities that viewers or investors in this part of the world trade in. Perhaps, would you say that it's because of a lack of understanding of these commodity types?
I would say that it's just that they have not paid attention to commodities for a long time. After the last super cycle, commodities have sort of like been at the background rather than in the foreground. Investors have been looking at stocks, and practically most stock markets are overvalued now, I would say, for personal opinion. But if you look at commodities itself, it's new arena that they can look at. I wouldn't say put all your eggs in one basket in commodities itself, because commodities, when you look at commodities, you primarily look at futures contracts, which are considered a higher risk investment than say fixed income. But it is one avenue they can look at and not miss the opportunity that come by every 10 years.
Actually, after at this juncture, I'd just like to ask you about, because you said that the demand cycle for different kinds of commodities differs from the other commodities. So last week, we in our previous episode, we spoke quite extensively about gold and oil. So what are the demand cycles like for corn, soybean, and other agricultural products? Because just now you mentioned that these are gaining traction in the US, and maybe it's something that our viewers should consider. Would you say that?
Yes, you see, for agricultural commodities, it's, I would say, the cycle is much shorter than, say, for gold and crude oil. It takes years to open up a gold mine, or even, say, you take palm oil, it'll take 3 years for a tree to grow. But for agricultural commodities, the planting season is quite short. And the planting season always starts during a certain time and it ends at a certain time at a particular place. Now in the Midwest, in the US, we have corn, wheat, and soybeans being planted. So the issue is, how well will it grow given the erratic weather that we have nowadays? So if you compare agricultural commodities with, say, other hard commodities, the dynamics are slightly different. But for the grains itself, it's easier to have a view. You look at the supply demand dynamics, you look at the ending stocks, and you look at the weather. This will roughly tell you where commodities for such as the grains are going on.
Right. So just now, after you mentioned, touched upon crude palm oil, and I think that's something that many of our viewers are quite interested in. So the movement in crude palm oil prices has been quite varied around the world. And one of the questions we received from a viewer was, how do you think the prices of crude palm oil will move in the next 12 months? I know that's quite a forecast that you have to
need
do.
a crystal ball for that. But anyway, most analysts, myself included, are looking at prices that will stay elevated this year. We know that prices have appreciated quite a bit, almost to 4,000 ringgit per ton. But going forward, when we look at agricultural commodities, even tropical commodities like palm oil, we do also pay particular attention to the stocks to use ratio, which is how much are the ending stocks versus how much it is used. And if you look at the ratio of two of the main edible oils, one is palm oil, the other one is soya oil. And if you look at the stocks to use ratio, you find that it is dripping down for crude palm oil. And that tells you that it is going to be highly in demand going forward. Practically, next thing is even you look at its nearest rival, crude soya oil. Soya oil, it's also has the same issues as palm oil, where you find the stocks to use ratio is sloping down. Most agricultural commodity prices are inversely correlated with the stocks to use ratio. So our view is that stock oil price, crude palm oil prices are going to stay elevated for some time, but we also are going forward going to face some headwinds. You know, India is the one of the largest importers of palm oil. But there are some demand issues that will be faced by India if the crisis is not fully controlled. Then we do have the planting season in the US where soya beans are being planted. And if the weather stays good, we would have cheaper soya beans as compared with palm oil. So it's going to be a tug of war between the two. You look at demand issues, but anyway, supplies are still going to be tight. The stocks are going to be low. Prices are going to be still elevated for the next few months. Normally, this is the high season production period, but we don't see that. Then we have going forward to December, which is actually the low season production for palm oil. And we do have weather issues. Last year, we do expect the same weather issues this year. And I would expect, my view is that for at least for this year, for the next half itself, palm oil prices are going to stay between 3,500 to 4,000 ringgit per ton.
Right. So another $1 million question I have for you, Aftar, is if this is the time to take up palm oil futures, or would you say that palm oil plantation stocks are safer options that our viewers should consider?
Oh, actually, it's a loaded question. It all depends on your investment objectives. These are two slightly different asset classes. One is priced differently from the other. If you look at palm oil prices, you're looking at practically the futures prices. And if you look at plantation stocks, plantation are priced for what it's currently being traded. Whereas if you look at crude palm oil futures, you're looking ahead, a few months ahead. And it also depends on your investment. And futures are traded on margin and leverage. So the risk is higher. And stocks are something that you own. Futures prices are a contract. So you actually need to understand what you are getting into. It's difficult to say which one is primarily can be recommended. It depends on each person's investment objectives.
Yeah, I definitely think so as well. So after an interesting shift that I've been noticing is that investors are a bit more mindful of ESG factors, and they're paying closer attention to this when they are making their investment decisions. So does this mean that the popular commodities like oil and coal will be neglected, and other commodities, like you mentioned, the agricultural stocks, will be prioritized?
It all depends on how far ahead you are looking at. If you are looking at down to 50 years down the road, then I will say that coal is going to be neglected quite a bit. The trend has already started. Less and less investment is going into coal. Whereas if you look at oil itself, it's not. You definitely will need oil going forward. Of course, one might argue that there's a number of electric vehicles coming down the road, but it's not going to be so in the near future. If you look at, say, even 20 years ahead, and if you look at countries in the West, it's going to be a different trend. If you look at in emerging markets like India and Africa, it's going to be something different. There, I think oil and coal is there to stay because it's going to be cheaper, and government regulations are not really going to enforce the cleaner and greener economy there. Whereas if you look at the West, the trends are slightly different. I would say in the West it would be different, and in the emerging markets it's going to be a different story.
So after your comment on a greener economy reminds me of a question that one of our viewers sent in, and that is, if you think fossil fuels will be wiped out or end up complementing green energy. I think that's quite a prediction to make.
I think it's maybe good the other way around. It's more of the greener energy complementing the internal combustion engine. You notice that once we come out of COVID, airlines will be traveling. I mean, people will be traveling all over the place, and there'll be a huge demand for oil itself. And on top of that, if you look at OPEC predictions, they're quite bullish on oil going forward. And to them, it's like down the road, it's maxed 30% or so, maybe 20% for the next few years, and maybe 30% further down the road, where the greener energy is going to be supportive of the overall commodity scene, the overall scene of the energy.
Right. So before we end today's discussion, Aftar, what indicators would you say that our viewers should look out for when trading commodities in the next few weeks?
Look at the commodities that you think that is going to be best suited for your investment profile. If you look at the grains, it's so much easier than to trade, say, crude oil, because the grains are primarily influenced by supply demand factors, and you can look at the stocks to use ratio, whereas the oil is more, I would say, macro, influenced by so many other factors: OPEC, non-OPEC, OECD, and demand supply dynamics.
Yes. So with that, we have come to the end of this week's Brokers Digest. Thank you, Aftar, for sharing your insights and tips on movements in the commodities market. So to our viewers, if you want deeper analysis on how to invest in gold and oil, you can check out Aftar's comments that he shared with us last week in our previous episode. So we hope these strategies help you in your investment decisions in the short and medium term. For more analysis on the stock market, you can visit the websites of Phillip Futures or The Edge Singapore. Do like us on Facebook and Instagram to be alerted on our upcoming Brokers Digest episodes. You can also leave us a comment below if you have any questions for Aftar or any other topics you'd like for us to discuss. I'm Amala Balakrishna, and with me is Aftar Sandhu, and we will see you again very soon. Take care. Goodbye.
Bye-bye.